All right, let's have some fun trading some kind of fun stocks, right? We're going to look at Activision Blizzard. You might have played some of their games. They're a video game company. Blizzard is famous for World of Warcraft and Overwatch, amongst others, and Activision for Call of Duty. And they merged several years ago, and they're a big player in the video game market. And we've got another stock we'll look at in this lesson too. That's kind of a fun one as well. So doesn't mean you should trade stocks just because they're fun, but you might trade stocks that really interest you, and that's okay, especially if you learn about those stocks. Maybe you love Blizzard. I know a lot of people love Blizzard, for example, and so they would trade Blizzard, pre-merger, and they might still be doing that also. So if I'm here on TradingView and I'm at the Activision Blizzard, I just had put in their ticker tape or their ticker, and you can see that we still got time in the market day here, so we're going to look at that. And if you're using the free account or just playing online without signing up, you'll want to look for something that says like full featured chart. You'll have like a little square somewhere, so you want to click on that and go into the full featured chart. Okay, so let's take a look at this one here as far as Activision Blizzard and what's happening. So first off, if we look at it from a longer point of view, you can see it's had some really nice long trends, right? If we look at the long view here. And then we'll look at, there's some interesting things going on in the short term over here as far as something that's more, might be more impactful as far as what's happening in the near term. But if we look at the long term, let's draw a trend line on here. Let's say we start, near the bottom here, and we're going to connect those two there, and we're going to kind of connect all the way through. In fact, we could go like that and start connecting through. You can see, how we're kind of, we'll go like that. All right. So you can see if we drew this long trend line, that this has had a long period. I mean, this is back about 2.5 months worth of data that's showing this long kind of overall trend, especially up in here where it went way above the trend line. So you can see a very strong long trend. And then as we get closer more to the near term, you can see it really came down. And the wicks had crossed below the trend line. And you could say, well, okay, I'm going to sell on that. The sell rule would say, once you break that trend line, you sell, and it did during that day. But you might be using a style where I need the close to go below the trend line, or I need a full candlestick to go below the trend line. Look at the trend line section as far as different ways that you can filter out those things and try to reduce, let's say, sideways movement or a pullback. In fact, I think that's what might have happened here at first. It looks very much like that. We had this strong upward trend, and there were some, prices up here started to really peak out. And then we had a really long close down day. A lot of profit taking. We've had this long uptrend, so we're going to take some profit. Might have gone a little too far, so it was another up day and then down again. Not a full gap because you can see the wicks overlap, so not a full gap, or downward gap, but there's some profit taking in here. It never really fully broke through the trend line. But if you were trading on this and say, well, once it breaks through a little bit, that's perfectly fine. You would have sold. And if you had bought way back in here, you would have made quite a bit of profit just following that simple rule. That's why it's a good rule to follow as far as breaking the trend line. But let's say you didn't. Let's say your rule, you filtered out and you said, I want to make sure a whole bar goes below or a whole candlestick goes below. Well, then maybe you didn't sell and it actually went up even further. And you can see it start peaking up here and then came back down. And then we had a big gap down, right? So now we're looking, this is the current trading day. 3 days back, we had a big gap down, right? There's a big gap down here. So that would tell you, okay, there's a big gap down. So let me take off my long-term trend here. Let me just do that real quick. And maybe I say, okay, there's a big gap down. We had a peak here. So maybe my trend is looking more like this in the short term, right? As far as a down type trend. But then you can say, okay, well, that's good. Maybe I'm not buying in here because this is now a downtrend. I might be watching this. But then at the same time, there's like this short little, definitely start forming uptrend here, right? We've got this going on here with them where we've now had 2 touches of the line here. We have 1 touch here, so not technically a fully formed downtrend, but I mean, sure, it looks steep, doesn't it? And we had a big gap down. That's a definite, downward move, right? A big gap down. Long candle bars to the down. Those are, we had 1, 2, 3, 4, 5 days in a row of downward closes. But now it looks like we're coming back here a little bit. So this might be a double touch here, close here on our current trading day. Maybe we're looking at an uptrend here. But you can see how they're, we want to walk through this a little bit and think through this a little bit. So let's look at some other factors. Let's look at some other things in here that might help us. So let's look at, let's say a moving average. And we don't want to use necessarily a long moving average. You can, but that would count for all this stuff. let's say we want to use a shorter moving average, either like a 9-day or a 10-day, or a 9-day, 10-day, or maybe 20-day, because we want to put more weight to this by having a shorter moving average, more to this recent term. In fact, we can even use a weighted moving average. Let's do that. To you put even more weight on the more recent stuff that's happening. Might be a way that we're thinking through this. So we're looking at moving average. We're going to choose weighted. This defaults to a 9-day. I'm going to make this look a little easier to see. So I'm going to make that an orange, and I'm going to make that line a little thick so we can really see it well. And now you can see our weighted moving average going above and then through this whole kind of whipsaw area here, right? Where it's going below and above the weighted moving average. These are our sell signals going below, and these are buy signals going above, right? So a lot of whipsaw here, up and down. Then we're above, and then once we crossed here, and we crossed that line, it's another sell signal as well. And with a big gap down, cross the moving average line on the 9-day, boy, look at that. That's definitely selling. Would have turned out that way because there was a big gap there. In fact, that might have been what fueled the gap. People are already like seeing it coming down for straight days, big gap, and they're like, got to get out and maybe take my profits from way back when. I didn't take them earlier, I'm going to take them now. So people got out for profit taking, possibly, and now we're looking at this uptrend coming back up. And it's real narrow trading, body here, but you can see we're right along that moving average. We're above it a little bit or below it a little bit. Maybe we want to wait for another full day to see whether it does go above or below. Might be a way to look at this. Or let's adjust our moving average. Maybe we want to look at, instead of 9 days, maybe we want to look at 20. Let's see what that does to our moving average if we go to 20. A little bit of change, but not much. You can see like here, it's still, the main body is still below, below it, and this is below. So, there still might be an opportunity here either to wait or see how it goes. Let's look at, so this might be something where what's going on is we're kind of seeing something that might be in a turn here. The other thing that's going on here is you see this E down here. That means there's an earnings announcement scheduled. If you see it like D's, those are dividends. So if a dividend was going to be paid, that you would see a D here. I don't see any D's, lots of E's. Yeah, here's a D way back here, right? So that's where they pay a small dividend. But we're looking at this near term, and we've got an earnings announcement coming up. So we look at our current day, right here, our current trading day. We're 1, 2, 3 days away from an earnings announcement. So people are anticipating things for that earnings announcement. Let's take a look at volume. A lot of times volume will be automatically along the bottom here. But let's put in volume because that might indicate to us what the traders might be thinking around, is it a real actively traded type time or not? And I suspect it won't be, and it isn't. So if we look at that big gap down, it's what we suspected. You'd have a lot of trading volume, a lot of transactions, people getting in and getting out, depending on what's happening and where they're at in their position. And then we get kind of some normal days, and we're uptrending, so it's a nice solid uptrend. And then we get quiet. Not a lot of trading volume. Uptrend, still above the uptrend, close to the moving average, hugging that, but not a lot of trading volume. If this was really spiky, let's say this really spiked up and this went up way up here, well, that might be a gap up or something, or the same thing if it went down. But there's not a lot of trading volume. So what might be happening is we might have some quiet days leading up to the earnings announcement, where people are trying to wait it out and see what happens to the earnings announcement, and then they're going to react to that as far as traders. Let's look at, instead of volume, let's take volume off here, and let's look at more of a market sentiment thing. So let's see what the RSI is going to tell us, a relative strength index, because we might say, look at this big run up. Yeah, we went a little sideways, but still peaked here. Are we overbought? Are we in an overbought situation, or because it went down so steeply, maybe we're in an oversold situation? Our relative strength index is what helps us with that as far as an indicator. So let's put in RSI, find relative strength index, and that's going to be along the bottom here. And as you remember from the relative strength index lesson, if it's a 70, it's an overbought situation. It's an overbought situation. It's above 70. And so we might want to sell the security if we own it, so it might be overbought. And if it's below 30, that means it's oversold. It might be a great opportunity to get in. And what are we seeing right now in this current day? It's kind of middling, right? It's right in the middle there, around 52, 53, around that range. So, it's nothing, nothing exciting there as far as we still don't know which way it's going to go, up or down, right? So, really the advice around this might be, we might want to just watch this and see how it plays out, right? We might want to watch to see how it plays out. But let's say for fun, we've got paper trading and we want to take we're kind of like, okay, this is okay. And we might want to take a little risk and just see what it does here. you know, and maybe for fun, we'll put in a trade here. So let's do that for fun. If this was real trading, I don't think I would do it. You know, I might wait a little bit more. I might wait one more day, and maybe I would have rewarded, maybe I would have, you know, not been, or maybe I put in a small amount, you know, as far as something. Maybe I put in half of what I want to trade, and then I put in the other half if it busts through that line. And if it doesn't, I put in some nice stops in here too as well. So let's say I'm going to go into trading here. So let's say I'm going to buy, right? Here's our prices. This is sell, you know, and this is buy over here. So a little bit of spread. You can see it's a very close trade. If you had a wide spread, you know, that would be a lot more volatility in it. But this doesn't have a lot of volatility. See, it's within a couple cents of each other. So I'm going to click on buy. And we're paper trading here, so I'm not risking real money, so it's okay. And let's say I wanted to buy 100 of these, right? 100 shares of this. And I said, okay, well, if I do that, I'll put in like 9,151 if I bought this, you know, at what's kind of currently trading at that 91.51, around that thing. Again, I could put in a limit order. Maybe I want to say, well, I want to buy, but I don't want to buy until it gets above this line. Or maybe I want to buy if it falls a little bit below. You know, you can decide how you want to put that buy thing. But maybe I'm thinking, well, I want a little more, you know, confirmation, so I might put in a limit order to say, I want to bust above that moving average line, so I might say, I'll buy at 92.41. Or I don't want to buy here because it's too close, so I want to buy if it dips a little bit further, so I might buy at 91 as an example. So I can use those types of things as far as the trading. Though actually, I'm noticing something. Before we trade this, I want to show you one more thing here on this, because there is something interesting that might be happening, and that might affect where we put our stop level on our buy. All right, so we're going to close this here, and I'm going to just remove some things here. And I want you to look at something, a couple things that might be happening here. So one, look at this here. This looks like an engulfing candlestick, right? So this has engulfed this guy here, which would be a bullish sign, but it's not fully because of our ranges up here. It's not fully engulfed. But if this had very small wicks on it, and this was like 4 times larger than this one, that's a bullish sign, a buying sign. So it's not fully an engulfing candlestick, but it is something to take note of. You know, that might give us a little bit more note on that. Though I wouldn't put a lot of weight on it, it's something to notice. But another thing to notice is look at this in our more recent term here. Might we be in a rectangle? Let me put some lines on here and let's talk about that. And the rectangle, then we can kind of trade on that rectangle. So let's say we're down here and we're really looking at these last couple ones, let's say, maybe right around here. All right, so there's a line there, and let's put a top part of our rectangle here. Oops, let's go here, and let's see how these are all kind of tight at the top here. Let's go right here. Okay, so if we look at this, you could say, well, from here, we had this go up in profit or in price. It came down, approached this line here, which would be a support line, and bounced off it and went back up. But then it came back down and bounced off it again. So that's a touch. That's a first touch. These guys got in there, got close. Maybe we don't count that as a touch, but you know, we can see that we're still above this support line. It's not breaking through this level of 87.84. By the same token, at the top, our resistance line, 95.88, you can see how it's touched here. These are both pretty close. You can almost count that as 3 touches. Though a better way to do it, maybe to consider this as one big touch, might be another way to look at it. But either way, it's tried to bust through this support line, or excuse me, resistance line, and wasn't able to. You know, the bulls, the buyers said, let's get up high here. Let's go past this. And they're like, no, we got to bring this down. Still closed higher, but it didn't go past. Then the same thing. We got up higher, but closed down lower, actually, lower again. And then even again, approached that line and then closed down here at lower at 93.36. Lower again. Then we had our big gap down, and now we're down here. But and we're coming here. Is that close enough for a touch? Is that close enough, you know, in your mind? What it is, that's a one, that might be from here, 1, 2 touches. Maybe this is close too. So this might be a burgeoning, you know, support line in here. So what does that mean for if we wanted to trade it today? Right now, we know we've got definite downtrends. We know we got, or not definite downtrends, but we've got some downtrend ideas. We've got some uptrend ideas. We're kind of in the middle. Our RSI was not telling us anything other than it's middle of the road, not an overbought or oversold situation. We've got an earnings announcement coming up. So maybe we're thinking like, well, if this does go down, maybe it's going to bounce off that support line, and that could be a way we could trade this today and then put a stop loss, you know, in relation to that support line. But at the same token, if this continues the uptrend, we could buy in today and ride that nice uptrend and then see what it does up here. If it bursts through here, we're going to like keep riding that pony, so to speak, because now we're on a definite uptrend because we burst through a resistance line and we've got an uptrend going, right? So that would be a good thing. But if it starts turning down, we can say, okay, looks like we're turning down, headed maybe down towards back to the resistance line. We could sell in here, for example, to capture this profit and then kind of repeat that process. So with that said, let's put in a buy order, paper trading for fun. Let's see what we can do here, right? So let's say we're going to take a little risk on it. Maybe we wouldn't put as much money in it or as we might normally, whatever your trading plan is, but let's say we're going to put in some. So we're going to go in and we're going back here and we're going to do our buy again. All right, so now we're at 91.62 something. And let's say we normally would buy like 100 shares of this. I'm just, this is paper trading, and we would buy for 91.60. Let's say we normally would buy 10 shares. It'd be 915, So let's keep it small. Let's say it's 915. So we're going to, trade for 915, but we're not sure we want to risk 900 bucks on this guy. So we're going to put in 5, right? So we're going to bring this down to 457. All right, so that's what we would buy it at approximately. This is still changing. We haven't placed our order yet. Now, we could put a target level here. That's the take profit level. And we could put a target price in here. But I don't want to do that in this situation as much because I could say a target up in here, but I'd rather see how that runs out. I don't want to sell too early when I might break through a support line. If anything, I know it's going to come back. So if it bounces off that, resistance line, if it goes past that resistance line, breaks through the resistance, I want to keep riding that. So I might not put a target price in this particular one. But what I might definitely want to do, and I always want to do, is put a stop loss in, right? So I'm going to choose a stop loss. So my stop loss, because I got this earnings sound, there's a lot of things that are going on here. I might say, okay, I've got my support line here around 87.87 or 87, 80 something. And I'm like, well, if it gets to here, I don't want to sell because it might bounce off this and go back up. In case I haven't evaluated this correctly or things can happen. Maybe the earnings announcement turns us down for a little bit, so it turns it down. But if it bounces off that support line, I don't want to sell too soon. So I might put my stop loss below that support line. Maybe I put it like, let's say 5% below that support line. So let's say approximately 87, half of that would be, 870, let's call it 450. So let's say instead of 87, we might put it at 84. Let's put it at 84, is what we want to put our stop loss in. So let's put in 84. So as you can see, whoops, not 9,184, 84.00. All right. So let's say we're putting this in at 84. So that means if it got down to this 87, I'm not selling it. I needed to go down even further to get down to that 84. So it'd have to really truly break through that resistance line. Then I just want to get out, right? All right, so this looks good. I'm not putting an upper target. I've got a stop loss in there. We'll see how this does. I put in a smaller quantity because I'm getting so many mixed messages. I might not even want to trade this, but I might trade this rectangle a little bit. Let's see what happens. That earnings announcement is going to be important too, so we'll have to watch for that. So we'll see how this ends up doing, but for now, let's go ahead and we're going to buy. We're going to click that. It's going to do the buy. Over here, you're going to see that the orders are placed as paper trading, so they're all being executed pretty much immediately. See how it's executing all that. I got my market order and I got my stop loss. I could have put limited orders in too, but market order, I basically, did that all at the same time. So if I've now bought this, you can see that I bought it, and and if I go under my paper trading account here, I open my paper trading panel. You can see I bought some Johnson & Johnson a little while ago, and then I've got some Activsion here. And right now, it's so early, don't even look at this, but you can see we're kind of right there. As far as the average fill price was 91.60, so that's nice. Stop loss at 84, and then we can kind of evaluate from there and be watching that. So there you go. We took a risk on Activsion there, and we'll see how they do.